Welcome guys to this week's edition of our mentorship video, and there isn't really much to discuss, but I'm going to highlight some of the aspects of the market that we have already discussed in this year's first mentorship video. So I'm going to urge you guys to watch again the video that I posted like 2 weeks ago, the first mentorship video for 2020. It's got a much deeper analysis than what I'm going to talk about here. So basically this is going to be like a summary of how the dollar index, gold, fiber, and the yen have reacted so far. So I'll also be highlighting like the levels that you need to look out for opportunities to get into the market, and where I'm anticipating market to head to. So now looking at the dollar index, if you remember correctly, during the first mentorship video for 2020, I highlighted the level 39.5 to be precise, which is our January low for 2017. It's this low here. This is the level that I'm talking about. So I highlighted that level to say, okay, we're gonna see price push into that low, since we highlighted that we've got a market structure change. You see, we had a market structure change here, but the push to the downside was not sustained. So eventually our higher time frame bullish has resumed, meaning the dollar is still getting stronger, you see, due to the events that have happened in the past 2 weeks. The fundamentals do support a strong dollar. So now we highlighted January low of 2017. Now I need you to focus here. You see those two equal highs? Yes, they might not be that equal, but in terms of pips, they are as close as they can get to being equal. So those two highs, we've got the last bullish candle, which is this one here. See that candle? So now we're going to highlight the opening and the closing price of that candle. Now the opening comes in at 98.755, 98.755, and the close comes in at 99.027. So we're going to highlight those two levels. So firstly, we've got the opening price, which comes in at 98.755. That's our opening price. And then we've got the closing price, which comes in at 99.027. So that's our closing price for the month of January 2019. That was our range, our trading range. So now, since we've done that, let me just zoom in a bit. If you remember correctly, I highlighted this range in the first mentorship video for this year, when I was highlighting that I'm expecting price heading up there, right? So now that I've highlighted the ranges, I'm gonna get rid of the line so that it becomes much clearer. Now I clearly explained that I expect the dollar to push into this range, meaning the dollar is bullish, of which that's what we have seen already during the first week of February. Price is pushed higher into that order block, which is our January trading range. So now you can clearly see we are only few pips from the opening price of January 2019. We are like 20, let's just say 25 points, 25 pips from January 2019 opening price, which I expect to be filled. So that means we are still bullish on dollar, right? We are heading up there to 99.39, right? Which is our low of January 2017. So I'm expecting dollar to push further high, right, into the supply zone, right? Remember, this is our supply zone. This is where we're gonna expect price to face some resistance. You see, we expect sellers to come in at that level, but for now we are bullish on dollar index. Prices will keep pushing high into 99.50, 99.40, 99.45. That's the price level that I'm expecting what price to push back into. So now that we have highlighted 99.39 and our supply zone, I'm gonna drop down to a weekly time frame, right? So now I'm on a weekly time frame. Let me zoom out a bit again. So now I'm on a weekly time frame. You can clearly see how strong the bulls are going to the upside. You see, the bulls are really strong. They are pushing price into the supply zone. There's no reason for price to come into this zone here. Nothing is gonna stop the dollar to trade higher, right? Except for some catastrophic fundamentals, if that happens. But at this moment in time, there's nothing that is gonna stop dollar heading into 99.40, 99.50. But now it's how we're going to react when price reaches that zone. Yes, some people, they will trade. They're gonna trade as soon as market opens. They're gonna trade long on dollar index, shorting gold and fiber and the rest of the other pairs, and long probably on the Japanese yen. But now in the mentorship group, you know what to do, guys. We need to take note of the yen's opening price, which opens during Australian daybreak, right, 12 midnight. Let's take note of that opening price, because it's gonna determine the other assets, like how they open, what's their opening price, right? I'm not expecting much of gaps, but that doesn't mean it cannot happen. It can happen, but let's take note of that opening price. So now, since we are anticipating further push into the supply zone on dollar index, that means these two equal highs here, right? What do we have up there? For those in the mentorship group, what do we have up there, right? On that 99.39, so let's say 99.40, we got stops, right? We got stops here above these two equal highs, right? That means there's liquidity there, right? Meaning there's much better chances for price to rally and clear up those liquidity before we start seeing market turn to the downside, right? So I'm expecting price to clear up the liquidity above those two equal highs. Then that's when I'll only get into the market, you see, because I'll have a reason now to say, okay, no, we have cleared up liquidity now, you see. as an institutional trader, I'll be anticipating that, right? The big guys with the big funds have jumped into the market, probably entice people to keep going long, but in other words, they want to tend to the downside. So while this is happening, that's when I'll be anticipating to get into the market, right? So that means I'll be looking for the moment dollar index gets to 99.40, 99.30, right? Then I'll be hunting for short trades on fiber and gold, right? Not short trades, guys. That means we'll be looking for longs on gold and fiber. The moment dollar index hits 99, we are looking for longs on the precious metal, gold and fiber. And then we'll be looking to short the yen and dollar index. But as it is right now, the market structure is showing strong bullish, guys. You see? So yes, there's no harm in risking it to go short on gold at this moment in time. There's no harm, but now your stop loss range is gonna be quite big, because it's very easy for you to be taken out of the market, right? You see, that's the problem of not being patient with the levels. So now we've got our 39 zone marked. So that is the area that I'm anticipating price to get into. And if you remember correctly, that 99.39 is our optimum trade entry of this swing price here. Swing from this high to these lows, right? That is our optimum trade entry of this swing. Let me just illustrate that for those who might not know what I'm talking about. You see, if we place our fibs right there, obviously they're not gonna be precise. I didn't do that right. Let me just redo it again. I didn't do that right. Just a minute. I need to zoom out a bit. Right, then I grab my fib tool. There's the lowest price. Look where the optimum trade entry is coming in. Of course, it's not precise. See, remember I'm dealing with a huge range. There's the OTE. It's coming in at 99.02, of which you can see here. This high is not correct. This high is supposed to be here. Right. See, our optimum trade entry is coming in at 99.226, of which January 2017 low is coming in at 99.39, right? So expect market to clear up the liquidity here. So now I'm going to go to a daily time frame. You see where the OTE is coming in at, right? So that will be like where I'll be anticipating to get into the market now. And what this does now, it reduces my risk. You see, my risk becomes less. Rather than entering into the market with the current price, means my stop loss is gonna be big. But now if I get into the market somewhere around 99.22, it means my stop loss is like 10-15 pips above these two equal highs here, right? Which I'm not expecting price to stay above for quite long before it comes down. I hope you get that right, guys. So 99.226, that range between 99.226 and 99.40 is going to offer us better chances to take the market to the downside, right? That's on the dollar index and the Japanese yen. So 99.226 is a level to take note of on the dollar index. 99.226 and 99.39. So now this is a dollar index daily chart. You can see how price has pushed up and we have closed above our strong pivot point. Remember the 98.250, guys. This high we have broke and closed above. you see. So there can be a retracement to 98.40 or 98.30 before another strong push to the upside. But at this moment in time, I can see like just a clear rally to the upside, strong bullish momentum all the way into the supply zone, and probably engulfing that supply zone, enticing people to keep going long, and then boom, it shoots to the downside. So that's what I'm anticipating on dollar index. I'm expecting price to keep pushing to the upside, right? Expecting strong bullish price move into the 99 price zone, right? So let's see now what this does on Euro USD. As you can see already, same again on Euro USD, we've had the structure 10 again. You see, February has been very interesting so far. It's only a week into February, but it has shown us a very interesting price action, right? We had a market structure, price trying to push to the upside, but then boom, strong dollar came in. We saw weakness coming into the euro, right? And then we started seeing low prices. So right now, dollar index, Euro USD, there's nothing that is gonna stop it to reach these lows here. Okay, let me go to my line chart so that I can highlight them nicely. There we go. There's nothing that's gonna stop dollar going to 1.089, which is already in sight, you see, because we've got liquidity here. There is liquidity below these two equal lows. See these two equal lows, there is liquidity there. Let me zoom in so that you can see much better. You see there's liquidity there, which I'm expecting price to clear up, and then after that clear up, now remember dollar will be heading into 99. You see those two equal lows, they're like 60 pips away, which can be a trade. Some people, they can take that short trade all the way to the downside, but you are risking being taken out because market can retrace to the upside, you see. But now look at the price action for Euro USD on a monthly. Strong momentum to the downside. So I'm really expecting price to clear up the liquidity below okay, let me get this right, guys. Let me get this right. So our low for this candle here is coming in at 1.08784. $1.08784. So I'm expecting price to clear up the stops below here. So we got sell stops just under there. We've got our sell stops, and remember on dollar index we've got those two equal highs where we've got our buy stops. So I'm expecting price to dip into these sell stops before we anticipate market to rally to the upside, right? This has to be supported by dollar testing the 99.39, 99.40 level, guys. The moment dollar does not reach there, and you see fiber playing down there at 1.087, then you keep holding those short trades, you see, on fiber. But as soon as dollar starts testing 98.39, 98.40, then anticipate longs on Euro USD. So now let's see what that do, what it looks like on a weekly chart. Right, this is our fiber weekly chart. You can clearly see we've got a strong bearish momentum here, and it's heading to those sell stops. There's liquidity here, guys. Here at this level there is liquidity, there's money for the big guys there, and the only people that can keep moving the market to that level there is the institutional traders, right? Retail traders, they won't be in a position to move price to that level. Only the institutional traders. So now let's see what we've got on a daily. So now you can see on a daily we've got a strong push to the downside, right? So if it's a case that there's retracements during market open or a correction, where do you anticipate price to correct to, right? You have to anticipate price to correct to this low. You see these lows here. So meaning you'll be anticipating price to retrace back before a further strong push to the downside. You see, because right now you can see what hold the price here during Friday's close was this order block here. You see, of which if you look at the body candles, guys, this candle's body closed way below the order block candle's body. That's a telltale sign of price that needs to push to the downside, right? I hope that is clear and you can clearly see what we are talking about. So yeah, we are heading down to 1.087. so that means we'll be anticipating short trades all the way to 1.087, but the moment dollar index hits 99.39, then we should be looking for longs on Euro USD. Same applies on gold, right? Right now gold has got a better chance of keep going to the downside to this range here. Let me highlight that for you, this price range. So gold has got a better chance of going down to that price range, which is coming in at so we're talking of 1526. Gold can drop all the way to 1526, right? So short trades might be ideal for those that want to trade on a Monday, but as long as I'm still in this range, this unknown range here on dollar index, then I'm not gonna make any moves on gold, right? I don't want to manipulate it. I don't need to trade price that's being manipulated. So I have to wait. So you must wait. Be patient enough to wait for dollar to hit the 99.22, 99.39 price zone. Then you can look for longs on dollar index. From where? From 1526. So not 1526 as such. We have to look at our order blocks. Which one was our last down candle here? Our last down candle is coming in here, but that's too much of a short range, which I expect to be cleared. You've got these two equal lows here. Let me highlight them for you. You got these two equal lows here, this candle and this candle. So expect price to clear up those lows, but then where is it heading? There. You see? So in that range, then yeah, probably you can start hunting for longs if dollar is testing 99.39 or 99.22 price zone. So in regards to gold, guys, you need to be very patient because this thing can mess up your equity. You must be very patient with gold. Don't just rush in without making a well calculated risk assessment. Don't rush in with an ill advised decision. You mess up your equity, guys. So with gold, let's make sure that we wait for price to get to 99.30 on dollar index before we can start saying we're looking for longs on gold. So now let's see what the Japanese yen is offering us. So the yen also did rally. We go to a monthly chart. You see, we had our February rally. You see those levels that I marked, guys, they are from the first video that we sent, that I sent you guys for this year. These levels are still in play. You can see now we are already at 109.73. We've managed to reach there, 109.73. So price can still rally, but 1112 is a bit of a stretch right now. This high is coming in at let's see, where is this high coming in at? This high is coming in at 110.36. Yeah, 110.36 is in sight for the yen before we can start anticipating low prices, or the low of this candle here, which is coming in at 110.94. sorry. So 110.94 is also ideal to start looking for short trades. You see, you can clearly see that's our supply zone, right? That's our next major supply zone here, right? That's our supply zone. So as long as dollar is showing further momentum to the upside, expect the same to apply on yen. Expect yen to push to the upside also. But once it reaches this zone here, take note of where the dollar index is. The moment you see dollar index at 99.39, 99.40, or even 99.50, then anticipate short trades on the yen. The same applies to dollar index. We should anticipate to look for short trades on the yen, right? So this supply zone comes into play. So I urge you guys to watch the first mentorship video for 2020. Kindly rewatch that video again, because there's a more in-depth analysis of what I've just summarized here, and then put it all together with this week's mentorship video. And for those who have got questions, those who can say, no, Ivan, I didn't understand this part, you know, guys, we are in the group. Just send a message. Don't be scared to ask questions. Don't hesitate to send me a message, and so that we can clarify on the things that you're not understanding. So yeah, that's pretty much about it, guys. And for those who haven't subscribed, I urge you guys to subscribe to the channel, because I'll be dishing out more tutorials in the coming week that are gonna help you in your trading journey. Remember, this is a journey, guys. It's not a quick thing where you're gonna say, no, I'm good to go now, and then you jump into the market, you get burned. I'm not gonna lie to you. So if you haven't subscribed, subscribe to the channel. And yeah, if you want to join the team, just inbox us, send me us a message, an email, WhatsApp, Telegram message. We'll be happy to welcome you guys into the group. So yes, that's pretty much about it. And happy trading, everyone, and have a great week. Thank you.